Hello, everyone. Happy to have you here. And so let's start. So today, in our webinar series, as you know, the general topic or the thread of all these webinars is how we mobilize private capital to spark social innovation or to spark new solutions that are more effective and more efficient to address social and environmental problems. And today we have a very special guest and a very special topic. I think we have Steve Freedman with us, and I will introduce it more formally in a little bit. But we are going to talk, and I think the timing is actually perfect because we talked about many issues. We talked about impact investment. We started talking about ESG, environmental, social, and governance criteria integration when in investment decisions. And today we're going to go specifically into thematic investing, and especially how we address environmental issues. And I wanted to share with you a little comic that you probably have seen on The Economist. It has been circulated in social media, but this was actually published on April 24th. And as we are fighting the COVID-19 or the Corona crisis, and hopefully if we follow this comic as a united world, because this is a systemic crisis, if you want, that is affecting all of us, and we're fighting this, we see in the background the big risk of the big monster, of the big fighter is actually climate crisis, not climate change. So we have discussed that hopefully some silver lining of this crisis could be that we start to understand that certain things that we consider maybe tail risk with very low probability in the past. We knew about the Ebola crisis, and we knew about H1N1, and we knew that there existed a probability of a pandemic type of with a viral source. But I think we have seen how unprepared many corporates, and I would say global economy in general, economies and countries were to this current pandemic. So how these risks that were systemic, and maybe we thought, and I will show you in a bit the report from the web of risk in January, it wasn't even there. But how can they cause a really massive destruction of value? And we are seeing companies confronted now that massive destruction, and probably, and we all know that this is just starting, that a recession and deep economic impact is coming. But how we look at this, not only from a defensive and a risk perspective, what I liked also about this cover of The Economist that just appeared last week on May 21st, it was that I think it addressed another side of the story. And if you've been following, and many of you, I've seen your names there repeated, we look at the risk scenario, we build the business case. Corporates sometimes care about this side of risk, but we also want to talk about the impact side and the opportunity side. And how can, as many economies here in Europe, it's not the case in Latin America, and we have a person from Argentina, I know the curve is getting very steep in countries like Peru, Brazil, Argentina, etc. But as we start to reopen the economies here in Europe, and we're starting to think how we do this sequentially, the idea is how can corporates transform, and how can we really seize the opportunity? And I think this will be a key part of the webinar today, of thinking on how can we address or how can we mobilize private capital in the different kinds of assets. And I think this is a great experience that Steve will bring to the table, and how we can embed these kinds of decisions in the financial sector. And you probably heard or have seen the hashtag going Build Back Better, or the Green Deal in the European Union. So as we are moving, we're trying to shift from this eminent firefighting that we have to do with the COVID crisis to think about more structural changes and what will be the nature of the recovery we want. And as I mentioned, the web had the risk in January. It seems like it was like a lifetime ago, but this was like some months ago. And if you look, especially since 2018, 19, and 2020, most of the global risk identified that had higher likelihood were environmental. And if you look at those that are going to have in terms of a higher impact, were also environmental. And even the red one that you see there is water crisis, so has social issues, but also an environmental impact. No, so I think it is quite important to keep looking at how can we mobilize private capital in order to address these issues. And something we define a lot of times in these webinars is something that defined precisely impact investing was this intentionality. So investors look for a specific outcome or a specific topic, and when we talk from a corporate side, we talked a lot about purpose. So how can purpose drive strategy and drive the solutions that we are going to find? So in this scenario, I want to ask you a little poll question. If you, again, as many of you have been here, you know that at the beginning, and Steve also has the curiosity to think what you think about this. So let me launch the poll. And what happened to you after, or what with this crisis, has it made you think a little bit more about investing on environmental issues, putting your money, your savings, your pension, demanding that it goes towards environmental issues? Maybe less willing, you think that it'll be too risky, and you really don't want to address them, or no change? You were already investing, so you're not changing, or no change, you really don't like theme investing, you prefer a very diversified type of portfolio. And so what do you think? But I think that the tendency is quite clear. And probably we have a little bit of a selection bias, and the people that come to these webinars are already interested in environmental issues, obviously. But we are seeing that at least 54% of our audience is more willing to invest in environmental issues than it was in the past, and almost 30% no change, because they were already looking at these issues. So I think part of that, I think that silver lining that we mentioned before is actually even better, because we see that some private capital, some money, some investing were already happening, and some of them are actually interested in this. So what do I hope you get from this webinar today? So as we try to drive this sustainability transition, so these transitions around today, environmental issues, I wanted to think as a corporate, what are investors, and what is Steve is telling us that the investing or the financial sector is looking at. And because as we've seen, it is becoming more and more proactive, and investors and asset managers, etc., are engaging with corporates to see what you're doing, but in some cases also to make the decisions of what to finance and what not. And if you are an investor, again, how can we multiply the effort so this is not isolated with one asset manager or one independent institution? And how can we really move for a financial sector transformation to finance this greener future that we all want? And so without more further ado, because I already talked too much, so welcome Steve Freedman. He's a senior product specialist in the Thematic Equities team at Pictet. He's been at Pictet since 2019, and he's precisely, as you know, the focus of this webinar, he's focusing on environmental strategies. He joined Pictet after 20 years at UBS, and in UBS he had very different positions. He was in the wealth management department as head of sustainable investment solutions, but he also worked in investment strategy roles, thematic investment strategy, and he was the head of tactical assets. So he really has a broad experience in the different areas. But if you see 20 years working in sustainable finance and how to bring this topic, so this is not something new to his portfolio, his experience. And if you notice a little bias that I also have with the speakers, I will mention one more. Since 2019, Steve has been teaching environmental finance at NYU as an adjunct faculty member. So I also like to invite speakers that have this kind of side of a little bit of being teachers or academics that want to share their learnings and inspire the newer generations at the university. He holds a PhD and a Master in Economics from St. Gallen, and he's a CFA charter holder and earned a FRM designation in Global Association of Risk Professionals. So let me start with one initial relatively broad question. Now, you work at environmental strategies at Pictet, and we know, for example, we had some webinars where we talk about SDGs, and we know that many SDGs prioritize environmental issues. But how do you go a little further? We know we have targets in the SDGs, but how do you go more into more specifics, and how do you map the environmental topics that you focus as an asset managers? And again, thank you and welcome for being in this webinar.
Good morning, everyone. Thank you, Vanina, and good afternoon to those who are ahead of us time-wise. It's a pleasure to be with you here today to talk about one of my favorite topics, so investing for the environment. Yeah, it's interesting that the SDGs has really taken off as a framework that was not designed for the investment community, but in the meantime has been embraced, at least as a lens, and very clearly, sustainable development. Two words. The sustainable part covers the environmental topics, and that there are a number of the SDGs that are focused on environmental topics for us. It's useful to have this framework more as a bit of an interface that allows us to have a bit of a common language with other sectors of the economy. If we want to really look at environmental topics, you have to go deeper than the SDGs, because ultimately this is a consensus framework. It's not a scientific framework. Here we just highlighted some of the SDGs that have an environmental angle. But again, this does not actually tell you how to go about things. And so for our environmental investing, we have adopted or basically implemented a scientific framework called the Planetary Boundaries Framework. If you've been focusing on environmental topics, you may very well have come across this framework. It's useful both to make the case for some of the urgency in addressing environmental challenges, but also really to see the scope of environmental topics in a way that really, again, is not based on consensus, but based on scientific considerations. And so this framework here, we'll come back to it a little bit throughout the talk. This was launched in 2009 by a group of scientists that were coordinated out of the Stockholm Resilience Center. Johan Rockström was the figurehead behind the effort. And what they tried to do was basically to identify the 9 most critical dimensions of environmental sustainability that can really be viewed as sufficient to really characterize the last 10 to 12,000 years in geological history, the Holocene, which has been a very stable period in history, both in terms of temperature, but also other environmental conditions which really have not fluctuated that much. And it's not a surprise that this has actually coincided with human developments and our species taking over the planet to the point where we are now basically running out of space. And this is where this boundaries concept comes in. And so for these 9 dimensions, they're pretty broad. Climate change is one of them, but you can see that this goes much beyond climate change. But for each of these dimensions, there is a science-based limit that was established by this group. For climate change, the limit would be compatible with the 2 degrees warming scenario of the Paris Accord, but you have similar science-based limits that were determined for the other conditions. And this is basically a framework that's been used for policy making, to try to make holistic choices in environmental policy, and also for coordinating across countries. For us, this is something that we view as a very good place to start, because it's comprehensive, it's holistic, and you have dimensions that also allow you to view the interdependencies between different categories.
So what would be the key specific environmental concerns if you want to go more into detail of this framework.
Yeah, so there, among the 9 dimensions, there are actually 4 that are viewed as being in breach, where our current level of activity is in breach of this limit. So climate change is one of them. I think that one is pretty well understood. It's probably the most covered. But I'd like to highlight the 3 others, which are also beyond the limits, just to illustrate a little bit some of the thinking here. So here we have the dimension of biochemical flows. So here we're talking specifically about the flow of nitrogen and phosphorus. Here it basically has to do with the process of extensive agriculture that we've been using for the last 60 to 70 years worldwide. And we have intervened in the cycle of nitrogen and phosphorus in a way which is creating very significant imbalances. Essentially, the fertilizer that we put on our fields, a large part of it is not actually absorbed and ends up in our rivers, in oceans, and leads to a process of basically killing biodiversity. This is called eutrophication. So essentially the nutrients lead to algae bloom. When the algae decompose, it withdraws oxygen from the water. And without oxygen, you essentially have extinction of a lot of marine life. So these dead zones are a big problem. You have a picture here of one of the largest ones that have been identified. This is visible from satellites in the Gulf of Mexico, but there are currently about 400 of these dead zones spread out throughout the world. So basically a growing problem, very much linked with a very specific type of human activity here, fertilizers in agriculture. A second example of a planetary boundary that is in breach, this one is referred to as land system change, which is a bit of a cute way of saying deforestation. That's really, in English, what is happening here. And here again, some satellite imagery of the Amazon area, where you can see these fires, the red spots. Most of this is not wildfires naturally occurring. This is actually active acts of deforestation. And this is a good example of how these planetary boundary dimensions are linked, because this one is very much directly linked to climate change in 2 ways. Number one, deforestation is releasing CO2 into the atmosphere as you essentially take carbon that's been stored in trees and releasing it. Then you have a double whammy, because to a large extent the deforestation is happening because of an intended change in the use of the lands towards raising cattle, basically one of the most inefficient forms of getting protein for humans. And so basically this whole process is very problematic from a climate change perspective, from a biodiversity perspective as well. And biodiversity, to that point, is the third one I'd like to illustrate. This is actually the one that's the most in breach of all. Biodiversity, I would say, is one of these topics which is gaining a lot of attention. It's probably where climate change was 5 years ago in terms of the process of awareness, consensus building, and action that's starting to kick in. Like for climate change, where you have the IPCC, sort of the UN-based body that is setting the tone for climate change. For biodiversity, you have a similar organism, the IBPS, the Intergovernmental Platform on Biodiversity and Ecosystem Services. A little bit of a mouthful, but they too have it covering issues, writing reports. There was a pretty comprehensive one published last year from which this is taken. The key point with biodiversity is just realizing that, of course, there's some idealistic value in preserving life and preserving a species. But even if you want to take a purely human-centric, anthropocentric view of things, there is value in preserving biodiversity, because the loss of biodiversity is actually a loss of economic value. We'll talk a little bit more about that later on. But essentially, biodiversity is providing services that have value for human activity, and I think that is starting to sink in. And as a result, this is one area where you're starting to see more initiatives on the policy front, but also in terms of investor focus.
We had a question from an audience from Pietro, and so somehow somebody's moving a little bit my my PowerPoints, if you see it going crazy. He's actually asking, maybe if you can address it very briefly, with the COVID crisis, do you think that all these issues that were predating the COVID crisis and the environmental focus, we will take an advantage of this and will become more prominent, or will be the opposite and the economy or the recession coming will actually make us look into other more short-term type of issues?
So I'm glad that question is being asked. It's really front and center right now for the environmental investing community. And it's something we're monitoring very closely. I don't think there's a definite answer. You can only sort of speculate at this point. I think there are two types of factors to consider. The one is more short-term and is simply the results of these massive fiscal stimulus bills, which in different regions have a very different mix. So in the European Union, with this European Green Deal that was announced back in December, it's quite clear that the intention is to use the stimulus to push further in that direction. There's some details that are actually supposed to come out today in terms of the policies around the electrification of transport. But very clearly, this is the stimulus is pretty green. There's something that may be a little bit delayed just for logistical reasons, relative to original plans, but the thrust is very supportive. You have places like China, which are a little bit more mixed. So at the high level, basically, Chinese government continuing to affirm that environmental quality is a high-level priority, so one of the top 3 priorities for the regime. But you also have some signs that are sort of countervailing. For example, we know that for the first quarter, there was a pretty sharp increase in the permitting for coal-fired power plants. So as part of the way to stimulate the economy. So a little bit of a mixed situation there. In the US, it's at the other end of the spectrum where massive fiscal stimulus and there's not a whole lot of green elements in there. It's just a reflection of the preferences of the administration. So that's going to have, I think, some implications for this whole space. But I think longer term, and this is where things become interesting, this pandemic and the confinement that has been associated with it in really most of the world has brought to light a certain number of links that were perhaps not appreciated as broadly as they may be now. I think one of them is the link between air pollution and the mortality in terms of this current pandemic. So there's some studies in the US, some in Europe that have shown that there's actually a pretty important effect in terms of how much more deadly the virus has been in places that have high levels of fine particle pollution, for example. And so that is something which change in awareness could strengthen the constituency behind environmental policies. You have other types of narratives, typically based on some journal articles and then sort of popular press spreading the ideas, really just making the point that this is a zoonotic disease, so most likely having been transmitted from animals to humans, and that the way we have been encroaching on natural ecosystems actually makes it much more likely that this will happen in the future, because essentially we're stressing wildlife by encroaching on natural ecosystems. We're making more likely that they become sick, that the animals contract viral diseases, and because of the closer proximity, also making it more likely that this might be transmitted. So that too is a narrative, and there are a few others like that. The planetary boundaries concept, in a way, you can almost, in terms of what it means, you can almost transfer that onto the current crisis. In both cases, you have exponential growth, and you have a limit embedded in the system. So for COVID-19, you basically had the exponential growth in cases. People who were not familiar with exponential growth became familiar very quickly just by following CNN or other news outlets. And the limit here was more the capacity of the health system to deal with the crisis. And so that's become that link of exponential growth and hitting limits has become clear to many people. But essentially on the larger TAM scale, you have exactly the same thing happening on environmental issues. You may have seen in various places these hockey stick charts where economic activity is growing exponentially, but also our footprints are growing exponentially. Here, for boundaries, these limits are the system's capacity. And so that type of narrative, I think, could strengthen the resolve to deal with these imminent threats.
So what do you see coming strong from different asset classes? Because you work around different, how to embed environmental issues in different types of investments. So what can you tell us about that, and what do you see more post-COVID, but tendencies that were already there? No?
Yeah, so it's maybe just useful to have a little bit of a categorization of different responsible sustainable and impact investment strategies. This is a representation which is, you've seen versions of this elsewhere, I'm sure. So but basically starting on the left with the more light touch approaches that are based on excluding particular activities. That's started with the sin stock exclusions originally. You have the middle parts of the charts with the ESG oriented approaches. It can be relatively light touch with ESG integration, where you're incorporating environmental, social, and governance issues into your thought process. It doesn't mean you're excluding anything, but you're basically factoring in the risks. Or ESG best in class, which does involve some screening, but with the same type of considerations. Both of those have a little bit more a tendency to be process-based, so you're investing in companies that are well managed from an environmental and social perspective, more than outcome-based, and these are important building blocks. But for those who are focused a bit more on driving positive change, you have the approaches to the right. So thematic investments, we'll talk about that more since that's the area I'm active in. And then impact investing, which in a narrower sense is often viewed as something that happens more in illiquid vehicles and private markets, but where the type of thinking has started permeating listed markets, in particular the thematic investment space. So maybe just to be a bit more specific in terms of environmental topics, if we can move to the next slide. So for the exclusionary approaches, the environmental topics are typically not the ones that dominate those approaches, but you have seen really starting in 2014, the fossil fuel divestment movement grow. And that's probably one of the dominant areas where ESG-oriented investors, in some cases, are considering removing parts of the portfolio. You had some large players already in 2014, Stanford University exiting coal, Rockefeller Brothers Fund exiting fossil fuels, and more recently the Norwegian sovereign wealth funds, $1 trillion funds, decided to exit fossil fuels. So it's a pretty coarse approach, but it's one that is clearly becoming popular. But even beyond fossil fuel divestments, this is still very niche, but you started seeing some thinking around vegan investing or animal cruelty-free portfolios. That would be another example that would be more on this exclusionary side. As far as ESG approaches are concerned, here things are quite broad. Again, more process and risk-based, but including climate change risk. That has become very topical. We have much more disclosure now with the TCFD guidelines becoming a bit of a norm, encouraging companies to disclose on these risks. But you have other environmental areas such as water-related risks that are factored in quite often. And this topic of biodiversity, which I mentioned before, which is starting to become a bit more of an area. So I think that covers a lot of what you're seeing in listed markets, right? Not necessarily deep impacts, but certainly greater awareness of investors for environmental topics.
And what about the specific thematic investment? What do you see? Because we have quite a few questions in the chat also about electric cars, or what if you wanted to talk about different topics or areas that you see for thematic investing, and then we'll go to the more specific questions. Yeah.
Sure. So I can show you what we consider to be the universe of environmental solutions. This is how we structure things for our environmentally focused thematic equity portfolios.
Yes. So sorry. There we are.
Right. So basically, this is the thematic universe for these environmental solutions. So a pretty broad markets, and these categories are not rigid. They are expanding as new technologies and new solutions emerge. But it gives you a little bit of an idea of the scope. And so I just start maybe by highlighting these two broad rationales at the top, which permeates the reason why particular activities are viewed as environmental solutions. The first rationale is resource efficiency. So basically, here we're talking about business models that are helping others. This is often B2B type business models that are helping others do more with less. So basically, helping a decoupling between business growth and resource consumption. So this can be in energy, it can be in water and in materials. Those business models are interesting because they're not that linked to government policy. Here, it's really the economic efficiency rationale is both the reason for the profitability of the business model, that's economic efficiency, and for the environmental impact, which is the resource efficiency, but they're ultimately the same thing. The second rationale is what we call environmental quality. Here, we're talking more about a rationale that is linked to norms, which could be public sector norms, or they could be self-regulation, with the observation that the trend is strengthening. You see that in the EU, you see that in China. So more pressure on companies to improve their environmental footprints, and companies that can help others to achieve those goals are basically benefiting from this trend. So just a little bit more specifically in terms of the space. So we distinguish between the energy complex, which includes both the supply side, so renewable energy, of course, but a number of technologies that are needed for renewable energy to be able to take hold. So energy storage, smart grids, more broader parts of the power infrastructure. We have energy efficiency, that's energy demand management. So basically, business models that help others reduce energy use. Can be in industrial applications, it can be in the building sector. That's one area that is often neglected, but represents about a third of end consumption of energy. And then, of course, the transportation sector with this trend towards electrification. This segment, the dematerialized economy, is one which is specific to our portfolios. Here we're talking about software companies that focus on resource efficiency, so simulation, optimization software that can be very powerful drivers of efficiency gains for clients.
Robert Kwok is asking a question that we usually get in these webinars, and I'll get, and then we keep going on the topics, but just to see where you stand on that. They say, will you lower your required rate of return for this investment, for this thematic investment? What is the expected rate of return?
I mean, when for the one portfolio that we have that invests across all of these areas, based on the fact that we are looking at higher growth, higher secular growth parts of the investment universe, and that we believe by having this long-term focus, we're able to capitalize on some inefficiencies. Basically, the markets tend to be a bit more short-term oriented, so taking the long view allows us to capitalize on that. We expect that this can outperform global equities by a few percentage points, and so far, for the 5 to 6 years we've been doing that, that has been the case. Of course, that's it's only an indication, but that is basically our view that focus on long-term trends, whether they're environmental or other long-term trends, can deliver returns that are very competitive.
Good, thank you. Yeah, because I think there is a misconception that when you focus on trying to have an impact, you will need to accept lower market returns. Obviously, that nothing is guaranteed, but I wanted to get it out of the way. Good.
Yeah. So we can talk about that in the context of deep impact investing, where there might be more of a trade-off if we're investing in listed companies. So basically these are companies that are not capital constrained, and that basically have business models that can be just as profitable as anything else. But when you're investing in underfunded parts of the economy, then in some cases there may be a trade-off. If you're the only one willing to invest in a company, it might be a different situation.
And do you see, Ramesh is asking, do you see, and we had a speaker last week that was saying why we shouldn't save the old. No, do you see a possibility of disinvestments or investing less in oil and gas and airlines, for example, air transportation or sectors?
So was the question with respect to the current
to private capital expected to move away from oil and aviation fuel, at least partially, or what do you see in the longer run?
I mean, at the moment, we have been seeing a shift away from fossil fuels, and it's sufficiently significant that there are some studies that are showing that it's actually having an effect on valuations for companies in that sector, right? And it does take quite a bit for a shift to actually matter for the cost of capital. And so it's a pretty significant one. I think at the margin you have some micro shifts happening within the segments, and then again it's a result of this growing awareness of the challenges, which is leading to reaction of different stakeholders, whether it's governments, whether it's consumers, whether it's companies, and ultimately this actually means that it's creating opportunities for companies that are either doing a better job for themselves, and even more so for companies that are providing solutions to help others to be better aligned with these environmental goals. So I think this shift is happening and is set to continue in the coming decades.
Good. Any of the other topics? I see you mentioned there circular economy, and I get a lot of corporates talking about the circular economy and if this is a tendency that they need to pursue, and many of them actually trying to transform the business models to become less linear and more circular. What do you think about that?
I mean, it's a really exciting area for environmental investing, the circular economy topic. I mean, the general concept here is that ideally, to be fully sustainable, we need to sort of view planet Earth as a spaceship that is completely self-sufficient. This is the way natural processes have always been circular, but we need our industrial processes to become circular as well if they're going to be sustainable truly for the very long term. And so there's a lot of very interesting work that has been done at the Ellen MacArthur Foundation, which really has popularized this concept. And I think from an environmental investing perspective, you can look at this in a narrow sense. So business models that are truly circular, that really have to do with recycling and sort of closing the loop. Many smaller companies are emerging with this type of business model, and you're seeing at large corporations initiatives that don't mean that the entire company is circular, but initiatives to make parts of their processes more circular. And so that's an area that is an area of growth. But I think you can also interpret the circular economy much more broadly. The Ellen MacArthur Foundation has a broader interpretation, which also includes many things that we are covering with this environmental solutions universe, where essentially resource efficiency, it's not making things fully circular, but it's making the linear economy less intense. You're basically improving the efficiency of energy usage. This concept of circular economy also includes all kinds of activities that sort of extend the lifespan of objects, of machinery, of capital, without necessarily being fully circular. So it's a broad concept. I think it's a useful concept to frame things, because ultimately it does show you the end goal. If we really want to decouple economic value creation from resource consumption, we will have to move much more significantly towards a circular economy concept.
Can you mention a little bit, as we move a little into this part of this deeper impact that you mentioned, what is happening in fixed income environment?
Sure. So in fixed income, we have this area of green bonds, which is basically the closest to thematic investing in fixed income. For equities, we basically have those areas that we mentioned, where you can figure out whether a company is aligned, is active in those segments. With green bonds, it's a little bit of a different perspective in the sense that it's really about earmarking. Here are just a few charts to show what's going on in this green bond market. So at the bottom right, this is just the size of the market in terms of issuance. Quarter trillion issuance last year. So still small in terms of relative to the overall bond market, but quickly growing and catching up. It's one of these areas where, again, if you have an impact mindset, the impact is probably still relatively limited, right? Because you're not actually financing green projects directly. You're financing an issuer, and the issuer is earmarking the proceeds to go and finance a green project or green activity. So it's quite indirect. You're really ultimately buying general obligation bonds of the issuer. But it is something which has become an interesting way for issuers to sort of highlight their green initiatives. In some cases, to get access to funding that is cheaper, because you have some investors that are just willing to go for these green bonds. And so as this segment grows, I think you will come to a point where you can actually start having a more significant effect on the cost of capital for issuers that are issuing a lot of green bonds versus others that haven't entered this market. For the time being, it's still not an area where the corporate issuance is significant enough. A lot of the issuance traditionally has happened from multilateral agencies. In the US, you're seeing municipal issuers issuing green bonds, some corporate issuance in Europe, but still something which has to grow to really move the needle more significantly on financing environmental outcomes with this instrument.
Great. So you also mentioned you teach in general environmental finance. If we go into the again more into this deeper impact side, what interesting tendencies do you see, and what else is happening in this sector? We had some different webinars where we talk about blended finance, and we talked about impact investing too, and so what do you see, especially in this sector of environmental finance?
So I would distinguish between things that are happening that are in private markets, so private equity, venture capital, private debt, where basically those segments that we looked at that represent the environmental solutions market, all of those exist. They're just earlier stage for private markets, and so you basically have just the earlier part of life of companies, and eventually they might go public, and then they become available for listed market investors. So a lot of activity there, a lot of innovation, something that we follow very closely because it's basically our future pipeline. But I think what is really interesting, and you mentioned blended finance, is I would call it this broader area of innovative social and environmental finance. And just to make clear how some of this works, I just want to introduce this concept of ecosystem services, which I think you need to appreciate to be able to think about some of these deals. So with ecosystem services, it's a classification that is already 15 years old from the Millennium Ecosystem Assessment report. Ecosystem services, you can think of them as basically the cash flow from natural capital. So nature has a value as a stock, and ecosystem services are the periodic cash flow coming from nature. They can be classified in different ways. You can think of nature as a source of resources, for minerals, for agriculture. You can think of nature as a regulation system that basically provides all kinds of very useful services that if they weren't there, you'd have to basically build expensive physical capital. So air quality, water quality regulation are examples, right? So nature acting as a filter. You have critical areas such as photosynthesis. This is basically a free service nature provides that is essential to life on this planet. And then you have some more abstract services tend to be more human focused or recreational, idealistic value of nature. And so there's work going on to try to value these ecosystem services, and that's a critical element for a lot of this. You can go to the next slide. For a lot of the activity in this innovative environmental finance area. So just to highlight a few, you mentioned blended finance. This is one area of activity. Here, the idea, for those who are not familiar with the concept, is that you're bringing in different sources of capital to jointly finance particular project or funds. The idea being that the different types of capital may have different time horizons or different risk bearing capacities, or even different objectives. You could be bringing in philanthropic capital and profit-seeking capital, where the philanthropic capital is there to de-risk the position that remains for the profit-seeking capital in a way that's essentially you have a multiplier effect. So the impact of the philanthropist is not just the capital they're providing, but actually the fact that they've been able to grow the pie overall. So this is just one example. If you want to look it up from the European Investment Bank, this was a structure that was focused on renewable energy efficiency that brought in both public funds and private funds, with the public funds basically taking a more junior risk position. And this all went into a fund of funds that went in then to finance more targeted funds in this space, co-investment options as well. But a very nice example of how this can be a multi-stakeholder approach to deploy larger amounts of capital.
We had two very interesting webinars, one with Fabio Segura on the role of philanthropic capital de-risking in a more social rather than environmental, but also supporting corporates that wanted to transform in the cocoa industry. And we also had another one for talking about blended finance and a solution also with corporate with Michelin and sustainable rubber and how it worked with reforestation in Indonesia. So I'm seeing a lot of movement in these new solutions. But here we have a little question from Ferenc. It's a long question, but I'll try to make it a little shorter. He's actually a little skeptic. He said, it's good, we're trying to mitigate our negative impact and transform, but are we moving the needle? Are we really finding new solutions at scale? Are we able to solve these long-term problems, or is this just in a piloting stage?
I think, it's a good question, and it's a question that the impact investment community has to ask itself on an ongoing basis, and basically be quite frank about the assessments. You're really moving the needle in the deep impact space. That's where the change is happening, and that's just not a lot of dollars overall, right? So that needs to grow a lot faster. But of course, and this is why this whole sustainable impact investing value chain is important, what is happening at more mature stages. So for example, in thematic equities, all of that is essential to allow for optimal exit conditions for things that are at an earlier stage and will evolve to being sufficiently large. So you need to be approaching the whole spectrum, but it is true that the impact will be higher in terms of deep impacts. The one thing that we didn't touch on, which is critical and is a driver for change, is active ownership. And that's something which you can apply whether you're investing, whether you're a venture capital funds trying to, where you have the ability to influence companies very significantly, or if you're investing in listed equities and where it's your responsibility as a shareholder or on behalf of shareholders to be a good steward of capital. And that's one area where you're seeing a lot of focus increasing, right? So basically, it's becoming much more common in conversations between portfolio managers and companies, especially if they're long-term holders, to address environmental issues. And so here, there's a little bit of this trade-off. You have very deep impacts on a small base, or you can have a small impact on a very large company, and moving the needle even somewhat can actually have large absolute changes. So I think that's sort of the way to think about the whole space. And this is why it's important to see it as an ecosystem. And ultimately, we need to accelerate the growth in the assets that are mindful of these considerations if we want private capital to make a greater contribution than it is doing right now.
I'm seeing a lot more concern in that area. We have some board programs, and I've seen a lot of people at board members talking to me about ESG integration and how to talk to investors, because they're seeing this topic that is now sitting at the board level and making them responsible for some of the sustainability strategy, etc. And in this through proxy voting of more active ownership too. So I think as you were, I think you painted a great picture of the whole spectrum of how this environmental criteria and ESG in general has been embedded. If you wanted to point out some last takeaways, and we have a lot of questions, so if I can, I'll try to address a couple, but we're almost out of time. But so what would be kind of a takeaway? So what do you think the sector is going for our audience?
I mean, maybe just to answer that, just to highlight the last point on these pay for success structures, not that they're hugely important in terms of size, but these are basically arrangements where the outcome for the investor is linked to the impact performance. And basically, it's about aligning incentives, but it does point to the importance of impact measurement, which is a feature of these structures, but which is an area of growth in terms of really, I would say, impact R&D at the moment. So if you're looking for something challenging, but which is critical for this whole area, impact measurements is one of those areas. And there's been a lot of evolution in the last 5 years, but it's still early stage, right? And we're talking about double bottom line investments. The financial bottom line is one which is well understood, where we can easily track things. The impact bottom line is much more difficult. And I think it has to be an area where much more developments happen, because it will help legitimize the space to a greater degree. And I think that the more you have that accountability, the more it will be possible for more private capital to be mobilized.
Right. So thank you. And I think I have seen concerns in corporates all the time, especially when you bring these issues and they say, okay, how I measure it, how I measure the impact, how I do integrated reporting, how we get to put it in a strategic level with KPIs and even targets. So it is true that, and sometimes when I talk with the MBA students, they say like impact measuring is becoming a very valuable skill, even in the traditional corporate career, that is not only to work an international organization or an NGO, what it used to be in the past. So thank you for so much, Steve. And I think I hope it's been very useful for our audience. And in terms of extreme uncertainty, I don't think we don't really know what's coming. I hope it gives some hints of how to anticipate, and even not only anticipate, but inspire you to build the new normal. I've been doing some scenario planning with corporates, including sustainability issues there, and regardless of the outcome, if they see the worst case scenario coming after the crisis with a long virus, etc., or if they see, okay, we will go to a relatively normal soon, somehow these sustainability issues and the environmental issues that the transformation of the business model require to confront are common to any of the scenarios, so are becoming part of a key issue that companies are somehow, or at least leading companies, are realizing. So something that I would love to do today is to extend this challenge to our audience, to you that are coming to these webinars. And as you leave this webinar, if you can think as you leave 2 actions that you will do if you're a corporate, if you're an investor, if you're an entrepreneur or a student, a consumer, that how can you intentionally tackle this environmental challenge, whoever you are. And I think Steve has given us a lot of food for thought and hopeful tips. We had some investment or investor tips questions from the audience that I would extend to you later on. You can contact me, and I imagine Steve too, through LinkedIn, and in my personal case also at IMD. You probably have my email. If not, I'll share my contact here. And so my personal task here, or my personal challenge, is to build a community around these issues that mobilizes private capital. So please join me on this and keep coming to the webinars. Write to me. I'm very happy to invite any of you to be a speaker in future webinars if you're doing amazing things. And last, thank you so much, Steve, for the inspiring and useful conversation. And I hope we can count on you in the future too, and in future projects to come back. Since you like teaching, you may do some of that around this area too. So thank you, everybody. It's 12, and I hope you have a great day and feel inspired. Good.
Thank you for having me. It's been a pleasure.